What's up, guys? I wasn't even going to record today, but I don't know if you guys have experienced this. You have a certain day where, like, the only thing on your mind is dividend stocks, dividend investing. And that's how it's been for me today. I just got back from my first class. Today, the stock running through my head is Hershey, ticker HSY. On this channel, we've gone over kind of where I would like to ideally start a position in it. And I still haven't pulled the trigger. I do not own any shares as of now, but we'll have to see how that changes. And I've got one more class, but then we're going to go over, we're going to revisit Hershey's fundamentals. We're going to look back at the charts. We're going to kind of talk through some technicals on the weekly chart, and as well as go through some tabs on Seeking Alpha, guys. I want to create this channel to be a community of dividend investors, and kind of, I guess, not my mission statement, but kind of what I envision for this channel is, talking stocks with the boys. And I'll tell a quick story. My old boss, when I worked at a financial advising firm, he was on vacation for like 2 weeks in Hawaii, and he came back. It was his first day back in the office. And he said, or we all ask him, how was your vacation, whatnot, yada, yada, yada. And I remember the first thing he said, he was like, it was really good, but, I miss this. I miss talking stocks with the boys. And that, that kind of sounds like a cheesy story, but I think about that kind of story as the direction I want to take this channel. Okay, so this isn't going to be some presentation lecture all the time, guys. It's going to be my personal journey, kind of where I stand on stocks, the positions I have that pay me. And then I love if we could have, some interaction in the comments. You guys tell me, no, I disagree. I think you should look at this stock. Guys, I want this to be a community, and we're going to talk stocks with the boys, and girls. So, I got one more class, but I'll be back and we will talk Hershey. Thanks, guys. Okay, so I lied. I'm going to record more of this video while my lunch cooks, guys. I'm not in a rush, but I do have to leave for class at, I don't know, 12. Probably I could leave at 12:30. Probably make it. All right. Let's not waste time. So I pulled up Hershey's Seeking Alpha tab. I don't have a huge plan for this, but we're going to go through kind of what's been holding me back on this one, what I like. We're going to start with free cash flow per share growth. I've talked about this all the time, guys. That's going to be the company's total free cash flow divided by their outstanding shares. I always mention it because the shares outstanding, very important to us dividend investors. Those shares outstanding are the shares that the dividend is paid on. Okay, so, I love this metric. I say it kills two birds with one stone. You're getting a sense of free cash flow. You're getting a sense of those shares outstanding. And with that, you can kind of get a sense of, okay, how might they grow the dividend in the future? Okay, so Hershey's annual forward payout is $4.77. Let's keep that in mind, and let's go back to free cash flow per share. Okay, 2023, their free cash flow per share was $7.93. Okay, so that dividend, that $4.77 dividend, next year is going to have to be supported essentially by this number. If it is, and if there is margin, then we would call that a sustainable dividend. I see that in Hershey. Obviously, this is $7.93 is quite a bit bigger than $4.77. Hopefully they can continue in the right direction next year. We kind of see this 5-year trend, $6.05 in 2018. In 2022, almost $9, and then a slight dip in 2023. But again, we identify that trend moving in the right direction. That's what we like to see. Okay. Mia, stop interrupting the video. Lay down. Sorry, guys. Um, Net income too. It's another thing we have to see. We have to see that same sort of uptrend in net income. I look at Hershey's. Obviously the free cash flow growth per share was, I'd say, stellar. And then net income, we kind of see the same thing. I mean, it's not like some ripping growth stock, but you guys got to remember, this is a well-established company, and we see 5-year growth of 11 or 1200 in 2018 to 1900 in 2023. They're finding that bottom line. We're going to talk about why Hershey has been able to improve their net income, at this stage of the game, guys. Let's head over to. Okay, I did not start a timer for my pizza, I'm realizing. So let's head over to profitability. This is an important thing we're going to point out, guys. We visit it in almost every video. This net income margin. What do we see here? 17 and change. Okay, so 17.11%. Okay, it's a pretty good net income margin. That means Hershey has some wiggle room, and they can still come out profitable year over year. Okay, they can find that bottom line next year, even if things don't go perfectly as planned. Okay, we see the sector median is much lower at just under 5%. But if I'm going to be honest, I typically ignore sector medians, and I try to look at each stock almost in isolation with my own lens. So, if you want to look at the sector median, by all means, it is a lot lower than Hershey. That's good. But, I don't really care too much. Hershey 5-year average. This is what I like to look at. Okay. It's 15.67% here on their 5-year average compared to their trailing 12 months of 17.11%. Okay. We talked about how Hershey has been able to find, improving net income in the past 5 years. Why is that? We see the story here, guys. They've increased net income margin. Okay. So even Hershey at this stage in the game, they've been able to increase their net income margin over, a full percentage point. It says here it's up 9% compared to the 5-year average. That's a good sign. If a company can improve margins, that's a sign of good management. And, the company's being well run at this stage in the game. It's a mature company in Hershey. And we have also talked about this, but we will visit the dividend metrics, guys. And, I'm kind of going to say where I'm at. So in previous videos, you guys have seen, and I've said, it's been tough for me to pull the trigger because of this dividend yield, 2.47% right now. I typically like to get a higher starting yield than that on stocks. I will make exceptions, and I try to look at stocks in isolation, but I do think the one thing that has held me back has been I've been a little weary of that low dividend yield. It's not typically in kind of my wheelhouse. Okay. With that being said, though, let's look at some of the growth. And we're going to point out something interesting here, guys. Okay. 1-year dividend growth rate of Hershey. Okay. The trailing 12 months, 15%. Guys, that's huge. Okay. A company at this stage of the game, they've had 14 years of dividend growth, and they just increased their dividend 15%. Okay, Seeking Alpha gives this a A+. I don't even know how they come up with these, letter grades, whatever. I give it an A+ too. But what jumped out to me even more on this tab than that 15% 1-year growth rate is looking at the 3, the 5, and the 10-year numbers. And this is going to tell a story that we don't usually see, okay? It's going to tell a very similar story to that net income we just looked at. Dividend growth rate, 10-year CAGR, 9.5% for Hershey. Awesome. Dividend CAGR 5-year, 10%. Awesome. Dividend CAGR 3-year, 12.2%. Great. And then we just said the 1 year is 15. But what we see here that we don't usually see, the 5-year is better than that 10-year. The 3-year of 12% is better than that 5-year, and the 1 year is better than that 3-year. What story does this tell us? Why is this so different than a lot of stocks we look at, guys? Usually we see companies at, this stage of the game, as they get more mature, bigger, kind of economies of scale. What are they doing? Typically starting to slow down that dividend, shift deeper towards kind of that value play, right? They're slightly slowing down the growth rate of that dividend year over year. Typically. We just looked at it with Coke, and I don't know what video, but I know we just looked at it with Coke, and it was the opposite, guys. We pointed out they're slowing down the growth of that dividend. No, Hershey is doing, quite the opposite, at least from these trailing metrics. And I try not to get too caught up with this, but, as they're increasing the rate of that dividend growth and they're at this kind of 14-year mark, I personally kind of see this one, if I can get the right entry, I kind of see it as being like a sweet spot. No, no pun intended. A sweet spot, a sweet tooth for kind of that yield on cost play, guys. I have a sweet tooth for dividend yield on cost. I'm pretty interested in Hershey. I'm sorry this video seems a little rushed. I don't know. Maybe you guys aren't getting that vibe. I'm trying to keep an eye on how long the video is so I can get my pizza out at the right time. So here we are. We'll look at the chart real fast. This is the weekly chart, guys. I've said it before. I'm interested in this 170 level, okay? I guess I had determined that's when that dividend yield is going to become, attractive enough for me. I'll be willing to fork up some capital towards this one. But, I'm in class this morning. I'm reviewing my watch list, all the charts, and I'm kind of seeing this double bottom on Hershey, as well as, start of the new year. I'm feeling kind of some more positive market sentiment. A lot of times we see that in the new year. And, I guess I'm kind of in a position of FOMO, guys, if I can be quite honest. If we do see Hershey kind of reverse here on this double bottom I have circled on the chart, I think it's going to be tough for me to not have at least taken a small position in it. So this is something we face as dividend investors. We got to make decisions. What we want to buy, we don't want to get caught in a position of having some small position that really can't move the needle for our account. But, if we find an opportunity that we're very excited for, we're kind of faced with decisions. And let's say I do kind of enter this one and then it does fall. Okay, great. Then I can buy more. I can average down. Versus if I enter now, I'm going to have to be okay with that kind of lower starting yield. So, I'm recording this video mid-January. It's probably going to drop like I'm some sort of artist or something. It's probably going to come out on YouTube. Late January or early February. So, maybe I'll have another update for you guys then. We'll talk about it again in my portfolio review for February. Here's where I'm at with this one, guys. This was a quick video. This was spontaneous. Obviously, I was just kind of hoping to bring this stock to your position, kind of talk you through where I'm at. If you are interested in Hershey, you're going to have to do a lot more due diligence. I'll try to cover it more in depth on the channel as well, but, all right. Thanks for watching, guys. Please subscribe.